Contradict everything David has said. Not really. I agree with some of the things he said, but maybe for different reasons, actually. Especially oil, I agree with. Not that it's going to go back down. It's struggling. So that's what's going on. Is this enough light for you? Or is this going to screw up your...
Oh no, it's fine.
That's fine. Okay, market review, stocks and commodities. This is the title from last time. It's still the title now. Okay, contents of the presentation not intended as a recommendation to buy or sell. They're for educational purposes only. This is our legal defense or whatever. Okay, this is what, if Brexit passes, this is going to be the European elite's reaction. That's Christine Lagarde from the IMF. This is what David Cameron will do. He's the PM of England. This is the people who are saying if England leaves the EU, that England will turn into this, nothing but abandoned like houses. This is an actual picture of Detroit, by the way. And it's one of the better sections of Detroit. And for years we've shown pictures of Detroit. I mean, it looks like Beirut after it was bombed. This is an American city. America is a rich country. How can such a thing exist? And it belies the fact that we are so rich or everything is so good. And there's worse looking places in Detroit. This is absolutely nothing. So, but the leave people say this is what Britain is. Now, if they don't leave, this is what's going to happen. Everyone's going to be rich, and they're going to go to these elegant parties and jump in the fountain and go crazy. Okay, so that's the Brexit summarized in aggregate. So the vote is coming out. We're it's not clear what the turnout is. It keeps changing. The last figure I saw was 67%, was very high. I mean, if it falls below 60, Brexit will pass and they'll leave the EU. So it's not clear if that's going to happen. The last vote, with only a few percent in, was Leave was ahead 51 to Remain 49, something like that. You don't know what areas are reporting those, so it doesn't mean anything. Stocks, commodities, currency. Okay, big news. Brexit is the big news. The markets have rallied into the vote. The pound has gone up. It hit a yearly high today. The European banks, for the second time in less than a week, had massive rallies. Many of them are insolvent. In fact, it's not listed here. One of the big 800-pound gorillas in the room is there's a major banking crisis in Europe. No one is reporting it. Except for me, nobody is reporting on it. In obscure areas, I've written a number of articles on Seeking Alpha. The entire Italian banking system is insolvent. Deutsche Bank is insolvent. Credit Suisse in Switzerland is insolvent. Deutsche Bank's the big bank in Germany. All of these banks, they are completely, inextricably intertwined. So, even just Italy went under. That would drag everything else down. And if they found someone to ring fence it, you can't ring fence Deutsche Bank, which is a big, major international bank. We actually had someone come here, not to this room, to the Estonia house. She actually came from Estonia itself 2 years ago, and she was a banking analyst and an expert in European banks. And she said, I actually spoke to her recently this year, that the Deutsche Bank's capital cushion was statistically couldn't be differentiated from zero. It was so small, plus or minus, that it literally could be zero. Now, a big bank cannot have a capital cushion of zero. That means it is insolvent. So Deutsche Bank's really been insolvent for quite a long time. And this would be like Citibank in the United States being insolvent. It's that big. So, and it's not just Deutsche Bank, it's all banks in Italy and Credit Suisse in Switzerland. So, and even the good banks are not in great shape. So Brexit is sort of exposing this. It's not causing this problem. But it could cause the banks to collapse, but it's like the wind that came along and blew the thing off the cliff. That was teetering on the cliff. It didn't make it teeter on the cliff. So if Brexit passes, then this could happen. And if it doesn't, then a few weeks, a few months later it can happen. So the question is like when it happens, not if it happens. So watch this space. We'll keep reporting on it. The Fed is on hold for the foreseeable future. Janet Yellen just testified to Congress, and she's spent a lot of time talking about can the Fed legally implement negative rates. Now, what she should have been saying is, should we do something stupid like implementing negative rates? They're completely idiotic, but she's not talking about that aspect. She's talking, can it legally be done? So obviously they are thinking about it. It's a really bad idea. Precious metals, gold, silver miners have had a big rally. That rally is permanent. I started writing about that on Seeking Alpha in early March. I said the market literally switched overnight. That doesn't mean they're not going to go down. The miners particularly are way overextended. So you can't go up and up forever. You've got to like have some move down. Gold is sort of overextended. Silver is overextended. We'll see the charts. Energy, oil is like lost momentum. It's just there's something wrong with it on the charts. It's not going to go back down to the low like David said it's going to happen. That is not happening. It's been a fundamental shift in the markets. I've written a number of articles about that on Seeking Alpha too. And you should go read them because they're detailed, they explain what's happening. And my family has actually had connections in the oil industry since the 1940s. It goes back several generations actually. So, you know, and this is the days long before any oil was coming out of the Middle East. And, you know, Texas was the big oil center of the United States. So, you know, they saw the entire development of the oil industry as it exists today. And the same things happen over and over and over and over and over again. Every 5 to 7 years, there's some big collapse of oil prices. That's caused by factor X. And everyone runs out of the woodwork, say, oil's never going up again, it's finished, it's over. And it always goes up again, it always goes higher. So this has happened recently. It's just the cause of it was something different. And I've explained in the articles, it really is the Middle East causes. Fracking was blamed. Fracking increases supply, but the big supply increase actually came from Saudi Arabia and its neighbors and allies in the Middle East, not from the United States. So, like, you can't believe what you're reading in the papers. The reporters completely got it wrong, as usual. And I want to emphasize, most financial reporters majored in journalism. They know nothing about finance or any financial topic they're reporting. So I read some articles and I shake my head and I said, this is the stupidest thing I've ever seen. And like, I frequently do this with Market Watch. You better censor that. You know, and I actually found an ad for employment for Market Watch. And it actually specifies, must have a journalism degree. It would be nice if you knew something about investing in finance, but not necessary. This was their ad for employment. So how much do those reporters know about what they're reporting? And that's not exceptional. The CNBC TV is no different. The Wall Street Journal is no different. Barron's is no different. You name it. They are hiring people who are journalist experts. They know how to write. They have no idea what they're writing about. So this is why you can't make money from reading the newspaper and listening to TV. And these people are just babbling on something they're clueless about. So the Dow and S&P, David went over. They've been over one-year plateaus. There's been a ceiling. They can't get over the ceiling. David discussed this. We're totally in agreement about that. And I also think, yeah, they're not going to break through that ceiling. They're going to have to go down because the rally's going on way, way, way too long historically. Our analysis of the strongest sectors, we look at the strongest, weakest sectors. The top three from year to date are utilities, energy, and materials. Now, utilities is a safe haven. That's number one. And that's where you go when the market's going downhill or there's a bear market coming or people are really worried. That's been one all year. Energy and materials are more related to like a vibrant economy. So energy is like a special case in this case, in this circumstance. So this mixture is a bit odd. Now the strongest currencies year to date have been the Brazilian real. It's real, but it's pronounced real, which no one would imagine. I mean, Brazil is a total and complete mess. and its currency is the strongest in the world. The second, and it's almost tied with the shekel, is the Russian ruble. Russia is a complete disaster. No one would think the currency would be strong. But these are the two strongest currencies right now. After that is the yen. The yen has had an incredible rally. And then after that's the Canadian dollar. And almost tied with the Canadian dollar is the Norwegian krone. Now, what do these have in common? Both Brazil, Russia, Canada, and Norway are commodity-based economies. The yen is an exception. It's skyrocketing because the Japanese central bank drove it down to unsustainably low levels, and it's like, something falling off a skyscraper hitting a trampoline. So it's like bouncing way up with just as much strength as it went down. I mean, that has nothing to do with commodity. It's a special circumstance. Negative bond yields, there are at least 14 countries or political entities on Earth that have had negative interest rates. These are theoretically impossible, but not only have they did they happen, they've actually spread. Now this week, within 7-10 days, maybe it was previous week, I think it was this week, the German 10-year bond, well, the Bund, actually went negative for a couple of days. So the interest rate was like minus 0.002. And this is like 10 years, a long term for maturity for a negative rate. Japan has been negative in that maturity for a long time, though, and it's much more negative. Switzerland is negative. This cannot happen in theory. So when something doesn't happen in theory, you can't predict, you can't use that theory to predict what's going to happen everywhere else, like in the stock market, because the theory is not working clearly. Okay, we'll quickly go through this. So here's the three sectors outperforming. The black line is the S&P. You see utilities are 1, energy is 2, that's the red line, and materials. Materials are like steel would be materials, things you use for construction, very heavy substances. Certainly not gold, silver, things like that. So you can see these are the ones, 3 doing well. The 3 doing badly, the worst ones, finance is at the bottom, that is bad news. Healthy economies and healthy markets have good financial stocks do well. These include banking stocks, insurance stocks, any type of Wall Street company. And this is at the absolute bottom of those sectors. That's bad news. And then healthcare, which is a safe, traditional safe haven, which is usually good no matter what, is the second worst performer. And then XLY is consumer discretionary. These are things you don't have to have. Like the opposite is consumer staples like food, clothes, like shelter, things like you must have those to live. Discretionary things you could buy, like travel, expensive trips or whatever. Mink coats. It's nice to have them, but diamond rings, you don't have them. The Dow Industrials, here's that line in the sand that the Dow cannot get over. It actually goes longer than, this is a one-year chart, it goes longer than this. S&P, same problem. So it has to break above that line decisively. It can't break above it for one day by like 1/3%, and that's a breakout. No. It has to go above that line and stay above that line. And it doesn't look like that's going to happen. You look at these technicals, you see the RSI is the first one, that's losing strength as the market's price is going up. The MACD is losing strength as the price is going up. The bottom thing with the chart is a trend. This is just trend lists. So this is not a strong uptrend that's going up, 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 up. It's like a meandering going sideways. I'm piddling around. I don't know what I'm doing. I'm a turtle. So it's hard for this to break out and go higher. It just does it. Nothing on this chart shows this is going to happen. NASDAQ is not as strong as the other two. It also looks like that. You see that bar, the RSI lost strength, the MACD lost strength, while that price stayed sideways. Nothing in it, but the trend is like actually a downtrend, but it's like has no strength. There's no strength, no trend in this. So for that to break out would be really difficult also. The Russell 2000 is like there's no trend there either. The RSI, I circled that because this is an unusual pattern you sometimes see with stocks or markets, and it's called three roofs and a steeple. And I saw it on the RSI. This is the Death Star of technical patterns. You see this on a market, it means like it's going to collapse and have some mega downturn. So I looked at it, I said, well, it's on the RSI. I said, maybe this is some warning. We should like look at this with, both eyes very closely. So, but if you saw that on the stock pattern, you'd be very, very worried. So this is also, there's no strength in this. This is something that's really going sideways, and it's not enthusiastic. Okay, that's U.S. stocks. Let's look at the FTSE. We can see this rally. I'm going to have to walk into the, can I walk into the thing? If you look at the last 7 trading days, all the news is coming out. Brexit's going to fail. Markets are really excited about this, so they jumped up, and everything got better. But if you look at that trend at the bottom, it was a sell trend that has not turned into a buy trend. And even if it does, it looks like it'd be very weak. The overall moving average pattern on the top, that's the red, blue, yellow lines. That's pretty negative. It'd be a perfect bear market pattern if the yellow line was below the blue line. So it's pretty bearish, and it started turning bearish in August 2015. Not, long, long ago. So, and the FTSE's been going nowhere. This is not, if Brexit passes and they leave the EU, this will really tank. And if it doesn't, don't expect it to have some huge rally. You'll have a day or two rally, and then things will go back to normal. The DAX is in worse shape. This is the German index. This does have a bear market pattern because the red line's above the blue line above the yellow line. Notice this jumped up in the last few days on all that news that the Brexit's not going to pass. Notice there's a gap. That gap has to be filled. That means it has to trade down into that level. So that's not a good sign. None of these technical indicators indicate any strength. They indicate like sideways movement at best. So, and plus the chart on top is bearish. So the Nikkei in Japan is worse. This is much worse than the U.S. The U.S. is sort of lifeless, but going sideways, not so bad. And Europe is sort of going down and lifeless. The Nikkei is really going down in Japan. This is a pure bear market pattern. The price is below the 50-day, that's that yellow line. The 50-day is below the blue line, which is a 200-day. The blue line's below the red line, which is the 325-day. So you notice the RSI is below 50, which is bearish. The MACD is below 0, which is bearish. There is actually a sell signal that in the bottom, the red line's above the blue line, and that black line is crossing, but it's a very weak sell signal. But this is a bearish chart. It doesn't look good at all. It doesn't bode well for the future today. Brazil has been unusually strong. The currency is incredibly strong. They impeached their president. There was incredible political turmoil. You would think the whole country would fall apart, but instead the market skyrockets, the currency skyrockets. So it makes no sense. Right now, this is the price is stuck though in a trading range between the 50-day and the 325. That's the yellow line on top and the red line at the bottom. It keeps going back and forth. It has to break out of that. And if it breaks below, it will hit that blue line first. If it breaks that, it will go back into a downtrend. Now the RSI was downtrending as the price went up, the MACD was downtrending. So that's warning bad things were coming. There's no trend in that DMI in the bottom. Shanghai is China's a disaster. How much lower did you think it was going to go? Another 30%.
From the April 15th. It's come down 10%, so another 20 to 40.
Okay, because this was the high was 6,000. What was the high this time? Yeah, because China was a bubble in 2006-07. It collapsed into the credit crisis in 2008. It created another bubble. That's collapsed now. I agree this is not the bottom. We need another